All right, how's it going? We got a video. We're going to talk about AMC, touch on a little bit of GME, and the meme stocks, or if you want to call them momentum stocks. It is like right after noon. It's 12:07 at the beginning of filming here. Before we get into it, if you want to like and follow and potentially support me, you can do so on Subscribestar. I'll have the link in the description below. But if we want to look at here, we're going like Yahoo Finance here, and we can look at the AMC stock. Currently, it's trading at what's it right now? Saying 34.22, 34.20. We can look at the 5-day. It's gone down some. The 1 month still down some. The 3-month, we can see where it was. On the 21st, it started going up. Then it kind of hit a peak, and up here, why was that not saying? The high got to like 72.62. They kind of dipped back down. I believe that was the day it got down to it says 39.71, and it's kind of been up in the like the 40s and 50s here. Then it's kind of been going back down. So we will get into a couple of articles here. A lot of people are calling it FUD, which is go to FUD meaning here. So what does FUD mean in the stock market? Fear, uncertainty, and doubt. So if we go here, we'll like read this one first. It's like, you could lose everything on meme stocks. Franklin Templeton, CEO. And this came out this morning a little after market open. The meme stock craze has cooled off, or at least temporarily. So anything I say here isn't financial advice. I'm just going over this stuff. If AMC is something like a stock that you believe in and you want to buy and hold, and you think it's going to squeeze, I would imagine if you have the funds that like today would be a buying opportunity for you, because it has been sitting like above 50 or right around the 40-50 frame for a while, and now it's gone into the 30s. So if you were somebody that was wanting to, if you're waiting for like another dip, I guess you can say, I would believe today would be a decent day to average in some more. But it depends if you believe in getting AMC, or you believe she'll get into it too, like saying like having like strong fundamentals and all that stuff. The meme stock craze has cooled off, at least temporarily, over the past week. Favored equities in GameStop and AMC have plummeted, dropping about 10% and 21% respectively. The decline affirms the fears of observers who have warned that a pullback was likely for shares elevated by what some consider speculative trading. Well, it depends if you're like kind of outside of it and you're like looking at like, say, the fundamentals of the company and like was it like trade analysis and stuff, or if you're somebody that actually like believes in the company and wants the company to flourish, and you're like an ape that's like holding because you just like the stock. And we can see, I'm not sure if it has the, see if we can go to, see what the short interest is on this, if it's telling us right now. Is it telling us what the short interest is currently? Is it saying, is that what it is? 15% for the short? Or is it this one? So I'm saying, I'm guessing it's in June. All right, so that's showing the short interest. But it's like a thing too with the, because a lot of the Wall Street bets was like looking at companies that were like shorted, and they were kind of like using those as telltale signs and catalysts of what stocks to get into, and possibly ride it up from there and like squeeze the stocks. In a new interview, Franklin Templeton CEO Jenny Johnson, whose investment firm manages more than $1.5 trillion in assets, criticized the trading as risky investing, which all investing is risky, and you shouldn't invest more than you're willing to lose. But there is some that are more, like bonds, are very conservative because they technically don't even beat inflation really. And something like an S&P 500 ETF would be more conservative than, say, buying like a single stock and putting all your money into that. But all investment is a risk. Criticize the trading as risky investing that could produce lucrative highs or devastating lows. However, she says she's optimistic about new trading technology that helps everyday people access the market, predicting the trend will give traders opportunities otherwise exclusive to the rich. So that is there's like another video I was talking about the other day, how like smartphones and like Twitter has kind of like propelled news to be viral and almost instant. And in the same way too, like smartphones and like apps like Webull, I think Robinhood was like the big one to start it off with, like an investment app that also free trades. I know a lot of people don't like Robinhood now because of what's happened in the last year or so with them like halting trading, particularly on the meme stocks like GameStop and AMC back in, I believe, January. But it opens the door to average everyday people being able to invest, because actually, like, Robinhood is like where I started investing. And I think my first investment was probably not that much money, but when I started like more seriously investing, I think my first deposit was like $140 or something like that. And previously, if you wanted to invest in like other like index funds or ETFs or stocks, you'd have to like go online and pay like trading fees and stuff. And I know there was some like certain it's like an index fund versus an ETF. I believe with the index fund, you'd have to have like a minimum of like 5,000 like saved up. Then a lot of people that are like working day to day really don't have like that chunk of change like that. But someone like me and probably most people, you could probably put in, $25, $50, $100 a week when you get your paycheck, and just put it in and use that to buy stocks and ETFs and stuff like that. So it being more accessible is good. It having like a lower entry barrier to entry is good. Although people could get a hold of it and then like start doing like crazy like options trading, which can be bad, like the whole derivatives market, if they don't know what they're doing, and it's simply essentially gambling. But then again, they're getting into Robinhood being like when it does, like when you buy something like confetti will like go off. So you got to understand what your tolerance is, I guess. But I mean, it's not necessarily good or bad. It's just like how each individual uses that. On the meme stocks, I never like investing where there isn't fundamentals behind it, she says. But with I believe with AMC they've done it twice now, I believe, or like they've ended up like selling large portions of their shares, and like they've been able to like fund their money to like, I think they're using it like to to like up their equipment and their facilities to help keep the company afloat, because they were facing bankruptcy, I believe, last year, but now they're like clear from bankruptcy, and they're like trying to reinvest the money that they sold from those shares since the share price went higher, and reinvest it into the company. I think that the challenge with these things like meme stocks is, yeah, if you time it right, you're going to do great. Adge Johnson, who became CEO at Franklin Templeton last February, on the other hand, you could lose everything. Well, speaking with that, if you go back to like the 3-month or even the 6-month here, like it had like it had its initial peak here, like at the end of January. Even if you had bought at the peak here, you're doing way better now. But even if you had bought like, because I'd bought some like here, then I'd bought some more down here, or you just like kind of averaged down the price. I actually bought a few today as well. Like I said, this is not financial advice. This is what I specifically done. But if it's something that you think, well, I also don't have like a huge position either compared to my portfolio as a whole. So it is what it is. I think that the challenge with things like the meme stocks is, I read that already, didn't I? To be sure, shares in the meme stock darlings GameStop and AMC remain well above where they stood in the outset of the year. GameStop has leaped more than 900% over the period, and AMC has shot up more than 1,750%. So if you'd bought it early on and just held, you'd be up. Even though it's gone down, you'd still be up on your position. And you also got to figure out too whether you're like if you're holding it for the long term, or you're wanting to do like swing trading or something like that, or even like day trading. You got to figure out what kind of investor you are. Shareholders in AMC showed their strength last week when online opposition to the potential issuance of new shares prompted CEO Adam Aaron to cancel a vote on the proposal, and it brings up his little tweet here. Which, if you bring in more shares, if the company issues more shares, then it kind of like dilutes the existing shares already. Overall, the stock frenzy has fueled a record flow of money into the market from retail investors last month. Traders bought almost $28 billion in stocks and exchange-traded funds on a net basis, the largest amount in a single month. Since at least 2014, according to the data from Vanda Research that was reported by the Wall Street Journal. But wealthy investors continue to dominate the stock market. The wealthiest 10% of U.S. families own 84% of overall equities and 92% of directly held equities, according to a 2019 Federal Reserve survey analyzed by the New York Times. Johnson, the granddaughter of Franklin Templeton founder Rupert Johnson, began working in the mailroom at the investment fund over holidays at age 14. After a stint at Drexel Burnham, she joined the Franklin Templeton in the late 80s, serving various executive roles. Johnson said new trade technology, like I'd mentioned before, will allow everyday people to access tools and trade opportunities that have only been available to the privileged. You're going to see that actually what technology is doing is it is bringing to the masses what historically was only available to the ultra high net worth. What makes me more optimistic is that there's going to be these things that traditionally weren't available to everybody that now, because of technology, are going to actually be available as investment opportunities. And the more like what they call like you and me would be like, let's say average Joe investors. They call those like retail investors. But with the more availability to the everyday person to invest, because they were kind of treating Wall Street bets like this as well, because they'd got up to like 10 million people. If 10 million people decide they want to do something, they essentially become like a loose network that could be equivalent to like a hedge fund, with like, if they're able to pull, 10 million people together and buy certain stocks, then you can essentially make something that would be like a hedge fund equivalent with like the amount of capital that it's able to produce. But I think more and more people that get into it because of the technology and the accessibility to it, like, I think the markets are going to change more and more over the years with more and more retail investors. This is just more. We've seen obviously a lot of volatility, a lot of crazy new things. Meme Stocks Crypto. Give us your short 30,000 foot assessment of what's going on right now in the marketplace. Yeah, so you have to separate sort of the noise and really kind of the fundamentals that are going on. And I think when you talk about meme stocks, and I'll talk a little bit about my view on some of the crypto stuff. There's some of that's noise, and there's some of that's absolutely disruptive. But I think just from a market standpoint, you look at it and say, all right, we just come off a decade where there's just been massive central banks pumping money into the system. You've had interest rates at historically low levels. They're now you can't fall off the floor. They're probably not going much lower. So because of everything that's gone on in the last year, like, interest rates for like loans are like very low. I think even like home loans are like down below 3%, like 2.75. And it's become very affordable and cheap to borrow. Because if you borrowed money at like 2% and inflation is like 2%, then you can kind of like do it kind of as a break even if you think about it long term. So they're either going to stay there for a while or they're going to go up. Well, that means how you're positioned. You look at like the passive bond indexes, their durations have expanded over the last 15 years. That becomes a different risk. Equity markets were 50% of the return in the last 10 years. So there's a lot that have been great tailwinds for the last decade. And I can say one thing for sure, the next decade isn't going to have the same tailwinds, and so I think there's going to be some real challenges here. And then to the extent of the meme stocks, look, I never like investing where there isn't fundamentals behind it. And I think the challenge with things like the meme stocks, if you time it right, you're going to do great. On the other hand, you could lose everything. Well, they're also... So, like, you hear about, like, peak media and stuff too. If you like, they go like diamond hands and like paper hands too. So you need to be able to be somebody that understands like the stock market can like wildly go up and go down, especially with like individual stocks. And if you like bought here when it was like 60 or 70 bucks because maybe you didn't like it went up, then maybe you're just like, when it went up, you hear about it on the news there, and the more media attention it gets, technically the higher it can go, like rising off of that. But if you bought up here, then you saw it like go down, then you sold there, then yeah, you lost money. So you have to be an investor that understands that like stuff's going to go up and stuff's going to go down. It's not so much the day to day that you need to worry about. It's just like over, the long term. If you're a long term investor, or if you do swing trade that like if you swing trade like over weeks or months instead of like just individual days. So I mean, there's all that. Tell me what you think about it. Like I said, this is not financial advice. I'm just talking about it. But if you do want to follow and support me, you can do so on Subscribestar. Like, follow, subscribe. YouTube, BitChute, then the audio on Anchor that goes out to Spotify. Then also I'll be putting it on Facebook, Minds, Gab, and Parler as well to try to get it out to as many avenues and platforms as I can. All right, later.